Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining us for this segment, we have Caleb Silver, Editor-in-Chief at Investopedia. And for this segment, we're going to discuss if you are a trader or an investor. And Caleb, this is such a great time to be talking about this, especially with retail participation really in the market over the past couple of years. So what is investing? What's trading?
Great question. And so many people did join the stock market, but I don't know if they knew if they were investors or traders. So think about investors as folks who are making long-term investments. They're investing for the long term. It's a goal, maybe it's retirement, maybe it's buying a house, but they're thinking about holding on to these investments for many months or many years at a time.
And when we think about trading, sounds like it's something very different.
Absolutely. Trading, some people even call it gambling, but it's not necessarily, is trying to lock in short-term profits, sometimes by the minute, by the hour, or even by the day. You're trying to bet on short-term moves in securities and to try to take advantage of those to make money, but they're very, very different disciplines.
And if we look at it side by side, long-term investing versus day trading, explain to us the different types of products you might be looking at.
Yeah, so if you're a day trader, you're looking at patterns, you're looking at charting patterns, you're looking at technical analysis, we call it. You're looking at the history of a stock's price or an index's price. If you're an investor, you're looking at long-term performance. How has it done over the past few years? How are the fundamentals? Are revenues growing? Are profits growing? Are gross profit margins increasing? As an investor, you want to look at the long-term fundamentals. As a trader, you're more interested in the short-term moves. So think sprinter versus marathon runner.
With the volatility in the market, we keep hearing about picking a top and picking a bottom. Tell us about market timing.
Yeah, market timing is very difficult. No one can actually pick the top or the bottom, and if they could, they would be multi-billionaires by now. So we always say time in the market is better than timing the market. But if you're a trader, you want to try to time moves in stocks, securities, or indexes to take advantage of those price discrepancies. If you're an investor, just keep buying, dollar cost average your way in every month if you can, and try to take advantage of the rise in assets over the long term.
So to wrap up here, you're an investor if, and you're a trader if.
You're an investor if you're planning on long-term gains, long-term investments, holding for the long term. You're a trader if you're not holding securities overnight. You're trading in and out of positions, trying to capitalize on those movements in the stock price. Very different.
All right, Caleb, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.